What's happening in the markets today feels almost impossible. Raising interest rates is supposed to crash stocks. An inverted yield curve is supposed to signal a recession. Liquidity drying up is supposed to kill risk assets like crypto. Yet here we are in 2025. Interest rates at multi-decade highs, a historic yield curve inversion, liquidity tightening worldwide. And still, the markets, especially crypto and tech, are rallying hard. Almost everyone got it wrong, except for one man. Today on Crypto Cortex, we reveal how Russell Napier predicted it all. And what he says is coming next. First, who is Russell Napier? He's a financial historian, author, academic, and macro strategist. He became famous in the 90s for predicting the Asian financial crisis, and he's been eerily accurate ever since. Some of his most shocking calls include, in 2021, he said inflation wouldn't be transitory, when most experts disagreed. In 2022, he forecast inflation surging from services, not just goods, and it did. He predicted the U.S. Federal Reserve would hike interest rates above 5%, and they have. Crucially, he said these aggressive rate hikes wouldn't crash the economy or the stock market, and again, he was right. So, how did he get everything right when everyone else was wrong? Two reasons: his expertise in financial history, his macro framework, outlined in his book The Asian Financial Crisis, Birth of the Age of Debt. Let's unpack it quickly. After the 1997 Asian financial crisis, countries like China, Korea, and others decided they never wanted to depend on the IMF's US dollar loans again. Their solution: build massive reserves of foreign currencies, mainly US dollars. How? By exporting goods to the West and hoarding the dollars they earned. Then they invested those dollars into safe assets like US government bonds. The result? Huge foreign demand for US bonds, pushing long-term interest rates artificially low in the West. This triggered the age of debt. Cheap mortgages, cheap corporate loans, massive leverage everywhere. This environment fueled decades of asset bubbles, housing, stocks, and now crypto. But here's the kicker. Around 2012, that system started breaking down. China and other countries began buying fewer US bonds and instead focused on domestic infrastructure. Think Belt and Road Initiative, issuing their own loans to emerging markets. The vacuum they left means fewer buyers for Western debt. And that, Napier argues, is why rates had to rise, not just because of inflation, but because of shrinking foreign demand. So, why hasn't this broken the markets yet? Because governments, not central banks, are stepping in. They're quietly manipulating the system to prevent collapse through what Napier calls financial repression. Financial repression equals forcing banks and pension funds to buy government bonds, keeping long-term interest rates low despite high inflation, stealing purchasing power slowly over time. Sound familiar? Japan has been doing this for years. Now, the EU and even the US are inching towards similar policies. Here's the future Napier sees unfolding. Governments take control of monetary policy, not central banks. Financial repression spreads, country by country. Forced buying of government debt triggers asset sell-offs elsewhere. Stocks, crypto, everything. Capital flight out of repressive countries begins into safer havens. Which countries are at most risk? Japan, the EU, and the UK are first in line. The US could follow ... but might be among the last. How can you protect yourself? According to Napier, and a bit of Crypto Cortex analysis, here's what to watch. Gold, timeless inflation hedge. Value stocks, especially outside financially repressive countries. Selective tech stocks, those aligned with government priorities. Cryptocurrencies, Bitcoin as digital gold, Ethereum as digital oil. Careful, governments might clamp down on crypto if capital flight explodes. And surprisingly, Napier even says holding US dollars could work, at least for now. Of course, timing is everything. Napier's full vision could take years to play out, or something entirely new, like an AI-driven productivity boom, could rewrite the rules. Either way, The age of debt is ending. Financial repression is rising. And if you're paying attention today, you can be ahead of the world tomorrow. That's it for this episode of Crypto Cortex. If you found this breakdown helpful, smash that like button, subscribe, and ring the bell so you don't miss the next deep dive into the evolving crypto and macro landscape. Until next time, stay sharp, stay curious, and stay ahead.